course, over to Christine Epp from Bell Direct for you in Sydney. So, Christine, not a bad way to finish the week when you consider regionally it's all a bit lacklustre this afternoon.
Not a bad way to end the week at all. In fact, shaking off that negative US lead in the Australian share market, up 0.4% at the moment. That does mean we're up over 2% for the week. Now, it's coming up to earnings season and there's not many surprises expected. Now, if we have a look at the gains and the losses in the sectors today, I think that's an indication of what we're going to see in the coming weeks when reporting season becomes our main focus. The market will, of course, be watching for weak results from the miners. Analysts are betting a 29% drop in earnings for this sector. And today we are seeing metals and miners down about 0.5%. Now, on the flip side, utilities, telecoms and industrials, they should be relatively positive, especially the housing-related stocks. Utilities is up 1.6% today. Telcos are up 0.3%. No surprises expected either from the financials. CBA has already warned of headwinds when it reported a flat third quarter profit. And financials are up about 0.5%. And healthcare stocks, that's expected to be the big winner this season. The sector is up 1.9% today, is the best performing sector. Ahead of the reporting season, we are seeing quite a number of big names issue profit warnings like Woolworths and Flight Centre. But all that means is it's going to be a more consistent report overall. So like you said, it is a quiet day to end the week. Volumes are a bit subdued, but we are positive so far today with the Australian share market up 0.4%.
Things looking great on that score and in that sector for Resmed with a rally of almost 7%, so holding at its intra-session high and talking up their prospects in the Americas importantly, so benefiting very nicely from the currency play as well.
Absolutely. Shares up 6.6% I believe today, and it was a very upbeat result. It's much better than the third quarter where we saw results slightly below expectations, and we did see its shares come off its high of $9.81 a share back in April. Now the fourth quarter saw revenue rising 9% to $453 million. That brings revenue for the fiscal year to $1.7 billion. And there's also a nice increase in dividend for its shareholders as well. The company will pay a quarterly dividend of 30 cents a share, an increase of 7%. So we are seeing quite a bit of interest in the stock today. Some of the key takeaways from the results: revenue from Europe and Asia Pacific is down 10% from the same period the previous year. That's mainly attributed to the devaluation of the euro. That's more than offset though by that key growth in the US segment, where it's estimated 12 million Americans suffer from sleep apnea. So we did see fourth quarter revenue there up 27%, and it's that ongoing revenue and market share growth coming from the US. And of course the lower Aussie dollar, like you mentioned, is what is keeping Resmed a favourite amongst investors. Now what's also exciting for Resmed investors is news that the company has acquired Curative Medical. Curative Medical will partner with Resmed China, and it already has a distributor network across China where sleep apnea is a growing problem with almost low access or no access to proven treatment. In developed countries, research shows 5% of the population suffers from sleep apnea. In China, that means 70 million cases. Sleep apnea devices, the market is currently worth about $3.7 billion, and it's expected to grow to $5.3 billion by 2020, which is probably a bit of a conservative estimate. Resmed is a major player because its product ranges from testing and data capture to hospital treatment and home care. It is well placed to target the very large global market opportunity. So overall, a bright outlook for the medical device maker. Shares are up 6.6% today.
Christine, really briefly, we could, just on Origin, shares are sagging slightly. Not a massive unwind though. The revenues are weaker. Perhaps unsurprisingly, given what's been roiling the sector of late. This is, of course, the quarterly revenue figures for June, but on sales which have risen. What do you make of it?
Not a huge surprise. Like you said, the oil prices has been hugely depressed lately, and that fourth quarter revenue is down 23% compared to the previous year, but it did post an improvement of 9% compared to the last quarter. It's not a bad result, but shares have barely reacted today because Origin Energy has actually lifted production by 15% from the previous quarter. So I think the market was expecting a better result. Little reaction. Shares are still trading almost 30% off its high of $16.12 back in September 2014. And this is probably because the market is more focused on the completion of its Australian Pacific LNG project. The company is operating in a very slow growth domestic retailing cycle. The days are over where we're seeing 60% growth in domestic retailing business, and it is really going to be the LNG project that puts it in a better position than its peers in terms of its earnings outlook given the oil price weakness. So a lift in production, but a less revenue, I guess, for the last quarter. No quality change in earnings for the energy provider, so not much reaction in the shares today.
Christine, wonderful to talk. Enjoy your weekend. Thank you.
Thanks, Carson.